ULTY, the Yield Max Ultra Option Income Strategy ETF, the ETF that a lot of us, including myself, have sort of a love-hate relationship with, and the ETF that just as of recently now provides downside protection, at least partially, with protective puts, has once again found a spot on my daily buy list. I even added more ULTY to my long-term portfolio, raising the stakes for my ULTY position and my gamble, where I'm trying to buy ULTY and get paid back my entire initial investment in around a year or so. Now in this video, I'm going to go through why I personally added more ULTY to my portfolio, share with you guys where I'm at as far as my real cost basis, how much I've been paid so far from ULTY every single week, and also most importantly, share with you guys how many weeks away I am from playing with the house's money when it comes to ULTY. So if you hold on to ULTY, you're definitely going to want to stick around, drop a like down below, and let's get right into it. My A to Z Dividend Investing ebook has already helped countless dividend investors get started with their journey. And my custom dividend tracker, the one I use all the time on my videos, has also helped so many investors stay organized and has actually helped them see their dividend income grow. Well, today I have something even better for you guys. When you click the first link down below in my description and you grab my A to Z Dividend Investing ebook, today you're not only going to get the ebook, but you're also going to be getting the custom dividend tracker, which you can use to track your own dividend income ongoingly, get direct access to my personal email where you guys can email me any questions regarding dividend investing. You're also going to receive a link to view all of my holdings inside my 7-figure dividend portfolio and see all the positions I add and take away ongoingly. And you're going to get for absolutely free my brand new high yield dividend investing ebook, where I show you the power of maximizing some of these high yielding ETFs and teach you everything there is to know about that also. This is going to be your one shot to grab everything inside of one single bundle, but you got to move quick because I'm not going to offer this for long. Now with all that, let's get back into the video. Now, one of the great things about ULTY's changes as of recently is the ETF does now offer protected puts, and it says right here, this will directly give you downside protection against loss at the expense of a slightly less yield. Now, I will say that seems to be the case because on a day like today, as of filming the video, the NASDAQ itself is down 3.56%, where ULTY is down around 2.75%. Not bad whatsoever. An ETF that, historically speaking, in my opinion, would be down a lot more if it weren't for those protected puts. Now, ULTY on the max time frame still looks absolutely horrible. It's down around 73% since inception. But if you look at ULTY's performance ever since April, just as far as price performance goes, the ETF has not been performing all that bad considering. Now, just so everyone's on the same page, let's talk about what ULTY is, what the investment objective is. Just so we all understand what we're talking about here, it says ULTY's primary investment objective is to seek current income. ULTY's second investment objective is to seek exposure to the share price returns of underlying securities, subject to a limit on potential investment gains for each security. ULTY is around $3.4 billion in AUM, one of the largest ultra high yielding ETFs across the entire market, and ULTY does hold on to underlying names that offer extremely high implied volatilities, which is how this ETF at least potentially is going to offer a consistent 80% distribution rate. Now, maybe you guys are wondering, why in the world did you buy more ULTYs of recently? I've said before that I don't want to make this position all that big in my portfolio, and to be fully transparent, my ULTY position is still under $10,000 all in, which is probably right around where I'm going to keep it for this experiment. Now, my portfolio size is almost $2 million altogether, so I'm very comfortable with spending 10K here, 10K there on riskier positions like this one. But again, I fully intend on losing money on this position because, again, the underlying names are very, very risky. Now, the main reason I added more ULTY is because ULTY, for one, dropped in price, offering my portfolio a nice dollar cost averaging opportunity. Across all my shares of ULTY now, I'm averaged out at around $5.70, maybe $5.75 per share. Now, ULTY is currently trading around $5.30, $5.35 per share. As of filming this video again, it can go lower. But as of right now on paper, I'm down around a quarter or so. And that's after holding for around 2.5 months now for the majority of my shares. So again, it could be worse. So the two main reasons I bought more ULTY to dollar cost average down is my main reason. And for two, as I've been buying ULTY and holding now for several weeks, I'll say that the distributions have been very, very steady. And again, this can also change. Maybe you guys are watching this video later on in the future, and maybe you're laughing saying the distributions were cut in half. But as of filming this video, the distributions have been very steadily around 9 or 10 cents per share per week, that is, which is definitely adding up to a ton of income in my portfolio. Now, keep in mind, I only started holding ULTY about 2.5 months ago. So during the time frame that I've been holding onto this ETF, it's not only barely traded down a little bit, but it's also paid me around 10 cents per share per week, which has definitely made up for the losses. Now, as you guys may or may not know, my main play with this one, again around a $10,000 call it experiment, I'm desperately trying to buy ULTY, which I already did, hold onto the shares of ULTY, and then slowly get paid back every single week, enough income to where my entire initial investment is paid back, and then I'm playing with the house's money. Consider this like I'm buying a rental property and my tenants are paying me monthly, and after let's say 12 or 14 or 18 months, my tenants have completely paid off my house. That sounds like a dream come true. And even though that might sound absolutely insane to some of you guys, I've done this with several other positions in my long-term portfolio. Names like Coney, a very small yet powerful position I bought a long time ago, basically when I first started trading, and I've been paid back my entire initial investment, which is insane. Now, with massive volatility re-entering the market, I'm very, very hopeful that the downside protection that ULTY ETF now is adding into the portfolio is going to protect. And of course, number two, the fact that the distributions have been so consistent, I'm also hoping that we keep seeing a 9 or a 10-cent payout every single week. But now let's get down to the numbers, my actual situation, because I'm sure a lot of you guys might be interested. Again, I'm not saying that this is going to work long term. I'm just doing it as an experiment. It's been a ton of fun to watch this ETF. And every single week I get very excited when I see that 9 or 10 cent dividend payouts. So far I own, let's just call it around $10,000 worth of ULTY. More or less, the weekly dividend amount has been around 9 cents per share per week since I started buying, around 10 weeks so far. That means that for every single share of ULTY that I currently own, I've been paid 90 cents to own every single one of those shares. Now this means that my real cost basis, my $5.70 minus 90 cents I've been paid back, is around $4.80 per share. Now, based off of that 9-cent payout, which I honestly think is probably going to go down to 8 or 7 cents at some time here, I hope not, but I'm just thinking worst case scenario, that 9-cent payout times 52 means $4.68 per share per year is how much income I should be looking to receive, again, if everything goes perfect. Now that means the annualized yield is around 82%, which is pretty accurate to where we're seeing as of right now. The payback time in total, 63 weeks or 1.2 years, and the amount of time remaining is 53 weeks. So we are just about 1 year away at this current rate, which again, things can change to be paid back completely from our experiment of ULTY. Now again, is this going to happen? Do I think it's going to happen? I think there's probably a 50% chance that I'm going to be paid back by ULTY within 1 year. And I only think it's that high because I have been paid back completely from other ultra high yielding ETFs. Again, it's rare, but it can happen. All to say that if you guys want to follow along with my ULTY experiment and see how much I lose or how much I make off of this one, definitely drop a like down below and subscribe, and comment down below your honest thoughts about ULTY as it sits. If you guys enjoyed this video, make sure to please drop a like on it, subscribe, and I'll see you in the next one. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.